Nischal Maheshwari, head institutional equities at Edelweiss Securities, is with us to analyze how the earnings season has gone by. Nischal, hi, morning. While we are, while we can't take our eyes away from what's going on with the broader market and the sort of rebound which is in place right now, I want you to highlight what the earnings season has been like. Excluding financials, it was quite a strong quarter. What, according to you, really met your expectations? What, according to you, really held out in terms of what you were expecting this earnings?
So, yeah, it's right basically that the quarterly results are more or less as expected. But the interesting part was basically if I would have excluded the banks, especially the corporate banks, the PSU and corporate banks, then the earnings grew by around 8% for Nifty. But if I would have included it, then we would have ended up Nifty with almost zero. So again, a zero growth as far as Nifty is concerned in the current year, though the top line was still around 10 to 11% kind of a growth. So this has been the worrying part basically, that some or the other sector actually just keeps on dragging the Nifty earnings down. And again, I think the next year earnings are projected to be like every year to start with around 25% growth, and then we end up somewhere either close to less than double digits, or now this year almost negative or flat. So this is my worrying feature, but I think good growth was shown by FMCG and consumption sector. Similarly, I think the metal sector continued to do well. Private sector banks, especially the retail side, they continue to do well. And interestingly, even pharma was better than expected. So IT obviously was a good bright spot. So I think there were a few of these sectors basically which continue to do well.
Having said that, when do you see a more consensus-driven earnings revival across sectors to come through? Do you think that that can happen in FY19?
So as I was telling you, FY19 also, again, I think the consensus is starting with the 20 to 25% growth. But I don't think so that is a number basically, though it is coming from a low base again. So, but I still believe that there is going to be cuts, especially on the PSU bank side. There is going to be cuts in numbers. Corporate bank side, again, there will be cut. Cement, telecom. I think a lot of these sectors basically don't seem to be in a good shape even in FY19. So I think estimates would be cut in these. So I believe we should be somewhere closer to double digit. But lower double digit is what I see.
How are you measuring now the health of the banking system and where we are in the whole recovery cycle? Do you think that there could be a meaningful revival in earnings there? Because there's a bit of a lag, except for maybe some of the top names which are more retail loan oriented.
So I think retail banks continue to do pretty well. You've seen growth of more than 20% for most of these banks. The corporate side, I think the NCLT process started pretty well. I think we've seen a couple of NCLT cases getting sorted out, and more or less as per expectation. So there is no big write backs which is market was expecting, but I think there is no negative side also. So as the NCLT process takes off and more companies start getting sorted out, I think that should help the whole banking sector, especially on the corporate side. Next year, we believe that there is not much to write off now as far as corporate banks are concerned. But I think the first 2 quarters would still see some amount of write-offs, and thereafter I see a more even play out happening as far as the corporate banks are concerned.
What's really held out in the quarter gone by, and that's got to be the consumption space, Nischal. A very, very robust quarter and very robust stock prices as well, with most of these names still sitting at their life highs. Are you finding valuation comfort in the sector now? And would you continue to buy more of the same on dips?
So I think some of these sectors have actually corrected quite a bit. If you really look at it in the consumption side, the housing product sector, so the likes of your Kajarias and Greenply and all, though that particular sector has particularly corrected quite a bit, I think almost down 25 to 30%. And given that housing continues to grow pretty well, we believe that that is a sector because of either demon or GST impact. You are seeing that the numbers have not played out as expected in the current last year and the last quarter also. I believe there is going to be another issue as far as the next 1 or 2 quarters concerned, as the e-way bill gets through and they are able to pass on the cost increases. So I think that's a sector one should look out basically, because the stocks are corrected quite well, and though the outlook on the industry as well as the economy still seems to be good. So I think housing building products basically one should look at, and quite a few of them have corrected quite a bit.
Okay, Nischal, we let you go with that. Thanks very much for joining us with your perspective and your insights on the markets. Really appreciate your views and your thoughts.
Thank you. Thanks a lot.